All right. Welcome back to the daily close. Hope everyone's doing good. It's this time, we're thinking of going over some on-chain and off-chain analytics for Bitcoin. Why that's going to matter, and where we are bullish, or if there's anywhere where someone ought to be bearish. But we're gonna cover a lot of things through this call, so a lot of good information. Just as always, keep in mind this is our own research, so do your own research too. But yeah, let's jump into some of these charts. Looks infinite bid. What are we looking at here?
Yeah, so the first on-chain analytic that we want to go through is the Puel multiple. And this is a very interesting graph here because it seems complicated. You can see that the calculation up there on the screen, but essentially it focuses on the supply of the Bitcoin network and mainly Bitcoin miners and their revenue. And it shows the daily value of Bitcoin mined in relation to its price. So when the amount of Bitcoin mined falls and enters the green area, this has historically been a very, very good buy signal. There's not been that many. You can see this, there's 1, 2, 3, 4, we're coming up to the 5th now. So historically, if you look back at the prices of Bitcoin, all the way back from late 2011 to the beginning of 2012, where price soared from $2.30 actually to over $1,000. And also at the start of 2015, all the way up to the end of 2017 as well, where price bottomed out after that bull run at about 150. I think it went all the way from, I think it was $1,100 all the way down to $150. So it was a massive, massive crash. Yeah. And then subsequently rose all the way back up to 20K. And then at the end of 2018 and March 2020, with the infamous coronavirus dump, this time price went from $3,800 to our current all-time high that we've seen most recently, which is $65,000. And this, as I mentioned before, this buy signal has historically been a great signal to take note of. And now we have the fifth one that has flashed. That's not to say that it's the best time to buy now. It's just something to be cognizant of.
Sounds really bullish to me. Anytime I hear anything about a good buying opportunity.
Yeah, I mean, as I just mentioned before, whenever we've seen this, the dark line, the dark red line, go down to the green area, we've always formed some sort of a bottom, whether that be like a macro bottom or a major bottom in the market. There's still a little bit, there's still a fair way it can go. However, I am pretty convinced that we're getting close to a bottom, if not reaching a bottom already.
Sure. All right. Yeah. That's pretty cool.
No, that's a good point. I think one thing to note for a lot of these types of on-chain analytics, for Bitcoin especially, is that do you want to actually use this as a indicator to day trade or swing trade? And I mean, I think the consensus for a lot of people is that it would be no, because this is more like a long-term analysis for long-term holders, long-term investors. So it's not necessarily something that you just want to sort of look at and say, oh, buy right away, and then sell at the next local high or something. Yeah, it's something to keep in mind for the long term.
Something to use in conjunction with other research you do. Not just a sole indicator to buy, right?
Right.
Yeah, I mean, we're going to cover a lot more different on-chain and off-chain analytics with Bitcoin as well. But yeah, I mean, the Puel multiple is one that's historically been pretty good, and this kind of ties in with mining difficulty. We've just seen, I think it was a couple of days ago or yesterday, the biggest adjustment in Bitcoin mining difficulty in its entire history, a minus 28% decrease in mining difficulty.
Yeah, I think
and this was
for people who don't know, this came about because of a large move of miners going out of China to places less regulated because of the recent Chinese crackdown, or I guess additional threats by Chinese regulators in the space that people are trying to move now, right?
Yeah, exactly. This was because of the migration of miners from China to different regions in the world, like you just mentioned. But what does this actually mean? It means that the network makes it easier for miners to complete a mining hash within the network, which incentivizes new miners to enter the network and capitalize on this opportunity. And there's currently a debate around whether Bitcoin mining difficulty affects the Bitcoin price or vice versa. I think the overwhelming majority have the opinion of mining hash rate and difficulty follows price. So you can see pretty clearly here that we had the dump first. We had the crash from the all-time high 65,000 all the way to where we are now, and then subsequently we've seen a massive drop in the mining difficulty as well. And I think this is a bullish sign, personally, for price at least, because as it incentivizes more and more miners to get in, effectively as speculators, they speculate that the price is going to increase. This drives up the hash power and correspondingly, mining difficulty and price will also start to increase again in a sort of perpetual cycle until the last Bitcoin has been mined on the network, which I believe is in 2040 something, 2046 or something like that. So, that we still have a while off for that. So what we have here is a comparison between the balance on exchanges for Bitcoin and balance on exchanges for Tether, which is a stable coin. So logically, as the price of Bitcoin rises, the balance of Bitcoin on exchanges also rises. Yeah. As more people are getting ready to sell a Bitcoin for profits, or losses, but mainly profits. And we can see from 2012 to 2019, on the first chart there, balance on exchanges for Bitcoin, that there was a positive correlation between the balance on exchanges and the price of Bitcoin. So as price is increasing, more Bitcoin is being moved to exchanges, getting ready to be taken, getting ready to be sold for profit. And since the beginning of 2020, which we can argue was the beginning of this last bull cycle, Bitcoin on exchanges has been steadily falling. And you can see a negative correlation between the balance of Bitcoin on exchanges versus the increasing price. So what does this actually tell us? This tells us that, more and more people are seeing Bitcoin as a store of value is one deduction that we can make, and moving Bitcoin off of exchanges and into cold storage, basically, because people want to keep hold of Bitcoin for the long run. And what this does is it creates a sort of shortage of Bitcoin in exchanges. So there's a sort of a supply shortage. And in theory, this will end up driving prices up even more. And I think we don't have this chart at the moment, but on the Ethereum chart, it's very extreme. Supply of Ethereum on exchanges at all-time lows. It's actually pretty crazy.
Wow. So people are less speculative about Bitcoin in a sense, and more keeping it because it will be used for transactions in the future, perhaps, or does it just mean that people just want to hold on to it?
I think people just want to hold on to it as a store of value. Bitcoin's been seen as gold 2.0, which I think is quite interesting. So yeah, I just think people want to hold at least a little bit of Bitcoin in their wallets, just in case, you know, it goes to $1 million, you know, or wherever it's going to.
Just don't lose that password. That's all. Make sure you can still access it.
Yeah, if you lose your wallet, your keys to your wallet, you're pretty.
You're in trouble.
Yeah, it's not a good situation to be in.
The legend says that guy's still looking for it. So to this day. But, all right. Okay. So then, how's that play to here with the Tether USD, the balances on exchanges? Is that the same thing, something similar with different exchanges?
Yeah. So I think Tether on balance and exchanges for Tether tells a pretty similar story. You know, if we compare the two graphs here, sorry, if we look at the bottom graph, we can see that there was a massive spike in the amount of Tether being moved onto exchanges in the last week, actually. That's about, I think that's about $2 billion, over $2 billion of Tether alone. This is not including you know, USDC or DAI, other stable coins. This is just Tether being moved onto exchanges, which really suggests that people are getting ready to buy. So, you know, usually it's smart money that comes in and puts a lot of money onto exchanges. You know, we've seen a pretty fairly sizable correction so far. I think it's about 55%. And what this tells us with Tether moving onto exchanges is that, you know, big money is either buying this dip right now or they're getting ready to buy it, which also suggests that, you know, we're close to a sort of macro bottom here.
Well, people are keeping the powder dry, the proverbial powder dry, getting ready to buy in. I guess that could be maybe a soft indicator for, you know, other people to maybe start DCAing in a little bit from now in anticipation of a potential pump coming up in the next few weeks to months, right?
Yeah, I mean, you rarely see a big spike like this. So,
yeah,
I mean, in my opinion, this must be like smart money. This must be like the big players coming in ready to buy, the capitulation from, you know, a lot of the retail, a lot of the short-term holders. So it's definitely a bullish sign, and suggests that we're ready to make, you know, a short squeeze, maybe up to, you know, mid 40,000s, $50,000 Bitcoin.
Yeah.
But again, you know, I definitely use this in conjunction with other on-chain and off-chain metrics too.
Yeah, absolutely. All right. All right, let's go jump into the next one then. What do we have next? Maybe this BASXD Buddha. This might be yours, huh?
Yeah, no, this next chart is actually quite basically supplements the two charts we just looked at, Bitcoin on exchanges, as well as the volume of Tether on exchanges. This is the stablecoin supply ratio. So basically, we were looking at Tether just now, but this is stablecoins as a whole. It's an indicator that was made by sort of more famous Bitcoin analyst, Willy Woo. But it shows the volume of stablecoins sitting on the sidelines versus the ones moving back into the market. And what you can see in more recent times, like on the chart by after April, is that there's a steady increase in the stablecoin sitting on the sidelines. And so, yeah, I think in conjunction with the other charts, like this is quite bullish. We don't know when it's going to really, you know, pick up and skyrocket, but it's definitely sort of a trend reversal.
Oh yeah, that definitely makes sense there. That definitely that supports what's being mentioned before. A lot of people moving money to the side, getting ready to jump in. It's cool. So I guess this probably is a more higher level view of what's going on in conjunction with what we just mentioned before, right? This unrealized profit and loss chart here.
Yeah. So the relative unrealized profit and loss is similar to the NUPL that people might have talked about. So relative or net unrealized profit and loss. Here, you know, looking to Bitcoin.com has very conveniently sort of labeled these different levels for us. You know, euphoria, greed, optimism, hope and capitulation. And this has also been a great indicator, historically, and has been successfully able to, catch tops of cycles in particular. So what this graph is showing is that BTC price, BTC price is the dark blue line, and the unrealized profit and loss is the red line. So the key principle of this graph is the ratio between market cap and Bitcoin investors taking profit. So when market cap rises much faster than profit taking, we see that the market is overheating, and you see the red line sort of catch up to the blue line and overtake it in some parts. And this can also be seen as investor greed. So, when we get to the euphoria stage in the red section there, you can see it spikes and then it comes down, pretty drastically. And again, it's been successfully calling the tops of these market cycles back in 2013, end of 2013, and then you've got the end of 2017 peak where it reaches the euphoria level. And whenever this red line does reach the euphoria level, it's been a good signal, basically. However, if you look at where we are right now, we didn't quite get to the euphoria stage. Even though Bitcoin has made new all-time highs, we didn't quite get into the red area, which suggests that we haven't quite reached the macro top yet for this cycle, at least. We have seen a bit of a cool down recently, mainly because of the market overheating. But it's kind of cooled down a little bit. We're in the optimism denial phase right now. I do think that we will make a run back up to euphoria before we top off this cycle.
Sure.
But again, it's been a pretty decent indicator, telling us when the top is in, basically.
It looks like, just look at the macro level here, where we're at bottom about, was it 2011, 15, then 19, and then right after 2020. I mean, it looks like at least at the macro level, it's trending upward, or at least making higher lows than before. So I mean, I thought that might look. I guess you could look at this both ways. Maybe there is a little bit more room. It could go down, and touch maybe the hope and fear area, or it might just start going right back up from now. But I think the other charts from before support maybe the latter, not the former, as in price might be going up rather than down. But I mean, this is something good to look out for.
Yeah, for sure. I think, as if we do see price try for new all-time highs again, the investors or the traders' greed will most likely get most of them, and this is when we see overheating of the market and this red line reach the euphoria stage, which means that most people will be less willing to take profits, just as has been in all the cases prior. Having said that, we haven't reached that stage yet. We haven't reached areas of historic significance. So I still think we have room to move up.
Sure. All right. Let's jump on the next one now. What we got with the SOCR, right?
Yes. So this is pretty interesting as well. So this is actually from, you guys might know, William Clemente. He's talked about this a lot. What this graph shows is that most selling comes from short-term holders, specifically in the last move down, the last capitulation. Most of the selling has been from short-term holders, as opposed to people who have been in the market, people who are experienced.
Right.
And we've seen similar moves in the past where a local bottom in the charts formed, namely the 2018 bear market and the 2020 coronavirus crash time. You can see that in the charts where it forms like a low. The orange line forms a low.
Yeah.
The black line is again the Bitcoin price. So this suggests that people who have been in the market longer and have held Bitcoin for a longer time are not realizing profits or losses at this capitulation. And those who are less experienced and bought the recent top, are being shaken out, mostly at a loss. So we're seeing short-term holders selling at a loss here. And this is what the orange line falling below 1 represents.
People getting knocked off here. Oh, this the SOPR, this stands for spent output profit ratio. Just for people out there.
Spent output profit ratio. So following a local top that we saw, or the macro top, the last all-time high, and the previous tops as well, we tend to see that the SOPR metric reverts to or falls below 1. And this kind of tells us two things. The first interpretation of this is that when the SOPR falls back to 1, those who bought at the local top are essentially selling their coins at a loss and potentially panic selling. And it also means that holders with profitable buys are largely keeping their coins dormant. So keeping it in cold storage or their hard wallet. If they were to sell their BTC, the orange line would then start to increase or rise back up, suggesting that conviction in the market is returning during major market corrections. So it's quite an interesting chart to look at. And since we are below 1 right now, we see a lot of people selling at losses. And this is where the smart money comes to buy.
Yeah, it's the proverbial dip to say, or per se, but okay. I think we got I think it's quite good. I think we got a couple more to go through. Maybe we can get through these in the next about 5 minutes or so. We got a lot of good info here. So this one is the funding rates. I think you've heard of you talking about this before, or it's infinite bit, but you can run through it again.
Sure, yeah. So funding rates is basically, the amount of, to put it simply, is the amount of money that you have to pay to either hold a long or short based on the difference between perpetual contract markets and spot price, as it says at the top there. So this is represented by the red line. As you can see, funding rates have been since the middle of May in the negative, which means that traders are actually incentivized to go long or speculate that the price of Bitcoin will rise, and they're getting paid to actually hold these longs. Funding rate becomes negative when there are too many people that want to short, as we can see right now. Everyone wants to bet that the price of Bitcoin is going to fall, and is essentially, as I said, incentive for people to start going long here, i.e., pay traders to speculate on the price of Bitcoin going up. With a sustained dip, as you can see, I think we've been in a sustained dip for negative funding now for around a month and a half, about a month and a half now.
Just about.
It means that, the appetite for people speculating going long is weak. And it is representative of the sort of the bearish market sentiment right now. However, in the current spot-driven market, a lot of the price now is driven by spot, not necessarily margin or leverage. Low or negative funding rates can also tell us that we're close to an end of the correction and potentially a good buy signal. So eventually, these negative funding rates will return to parity. They'll either go back to neutral, or people have to start paying for longs. And when that happens, that's a good buy signal and a good indicator that the market is returning to strength.
Like it makes I'm feeling pretty hopeful now. With all these charts that we've been going through so far, I'm feeling feeling good because I've been seeing a few other assets, including Bitcoin, doing a little bit of consolidation. There's a little bit of people not really sure what to do, but this is some good hope. So,
For sure, yeah. I mean, it's gonna have to come back up, as we see from the beginning of the year, Jan 2021. Basically, the funding rate was positive. It went up to 0.15% at one point, which is a huge spike. So, the chances of us getting back to there when price starts to rise and confidence starts to return to the market is pretty high. It's just sort of like a waiting game now. But we have been in sustained dip, which tells me that sooner or later there's going to be a squeeze. The shorts are going to get squeezed. We're going to see an increase in price, and then we'll have to take it from there. It could be a bull trap. It could be a sign that the market's ready to make new all-time highs, but we'll have to check other metrics to be able to confidently identify that.
Keep an eye on other closing candles, some other indicators and such. Let's go through this last one here, the global open interest.
Yeah, so props to Crown. Shout out to Crown. I took this from his Crown application. This is the global open interest rate. And it's fairly simple to understand. It shows us the amount of interest there is to buy or sell at a given price. So just to give you the lowdown of this, the colored line here is actually the open interest rate, and the dark blue shaded area, or the line representing that is the price of Bitcoin. So the open interest graph shows us that open interest has fallen sharply with the price of BTC in the latest correction. And open interest going up doesn't necessarily signify that we're in a bull market or signify people want to buy. It's direction agnostic, meaning that it doesn't matter. It doesn't care, which way price moves. What it does tell us is that there's, if there is, for an example, a decrease in open interest in line with a decrease in price, that the amount of people interested in selling is decreasing, and therefore likely it's a shorter term move, which we're seeing. On the other hand, if we see a spike in open interest alongside a fall in price, this indicates to us that investors and traders are wanting to sell as price falls. There's an increased interest in people wanting to sell as price falls, and it can lead to big moves in that specific direction. So since the big capitulation back in the middle of May, global open interest is beginning to increase again from its most recent lows, as we see like the consolidation of Bitcoin price around 30 to 40K. Yeah, but if we really want to start being bullish again, we'd ideally want to see, a big spike in this as price rises. So as price increases, we want to see interest in buying into that price increase. But we're still yet to see that. So, it's definitely something to keep an eye on. And if you do see a big increase in open interest as price moves up, that is definitely a confident sign, a sign of confidence.
Yeah, makes sense. That's we covered over, I think was that 8 different charts talking about where Bitcoin sits, and from overarching viewpoint, everything seems quite bullish in the direction. Money's being stored and people are kind of keeping that proverbial powder dry, getting ready to buy back in. But there's always there's still a few more confirmations people want to see, and maybe that's reflected in the consolidation we've been seeing among multiple different assets, where people aren't really sure if they want to fully commit in yet or not. But I guess overall, I'd say I'm bullish, and maybe some dollar cost averaging a little bit in here and there, even at this level, wouldn't be a bad move. Of course, do your own research, but put that in there. But I think it's overall all good. So yeah, just for the last few minutes here, any final comments you guys want to add in?
No, not really. Just I guess keep an eye out on these metrics. You know, I think we'll see confirmation for a lot of these metrics once we break out of the trading range that we're currently in at the moment, which is around about 30K to 40K for Bitcoin. You know, if we do break out of any of these ranges, what you want to see is, you know, increased interest in buying, increased volume. If you don't see that, it's most probably a fake out or a fake down. But yeah, just keep an eye out on these on-chain and off-chain metrics that will give you the edge in this market.
Nice. BASXD Buddha, for the final minute, what about you?
Yeah, I mean, my sentiment is quite similar to OX Infinite Bid. We've been trading in the range for a while, but based on a lot of these sort of on-chain analytics, we do see more or less a bullish trend. We did talk about sort of a potential bull trap, but if it does, you know, get past 45, 50K, it'd be good to assume that we're kind of in a general uptrend. But I mean, things like just, you know, Bitcoin's mining difficulty dropping such a significant amount very recently. Things like that are usually followed by bullish buying. So I mean, yeah, I think we're in a good place. We've kind of more or less hit a local bottom. We could potentially go down, but again, yeah, I think the direction seems to be short-term up for now.
Okay, cool. All right, then I think that covers everything. Keep watching out for the daily close. New videos every week.